to everybody out there as well. Okay, all right. So it is the last Monday of August. It's August 28th. Seems like the summer was here and now it's gone. Getting ready to get into September and October, and as we all know, that's when things can really get interesting as the volume comes back into the markets and as all the people return. Steve and I were just discussing probably, one of the low points as far as market activity goes in the last week of August. But there were still some interesting observations out there. Lots of, well, I can't say a lot of high quality trades, but some interesting stuff out there. So just want to thank everybody for taking the time to come hear what we have to say today. And before we get into the show, so to speak, I want to take care of the lawyer speak here. Just want to make sure that everybody in attendance is aware that all the information that we share with you in these webinars is for informational purposes only, what we could say educational purposes only. So if you need investment advice, if you need somebody, hey, do this, do that, buy this, buy that, please seek out a registered investment advisor or one of the other registrations that people get when they want to make investment choices and give you advice of that nature. So once again, everything here today is for educational purposes only. And of course, before we move on to the good stuff, for those of you who are regular attendees, bear with me for just 1 second while I give the new people an idea of what's going on out there other than our award-winning technology. We've created quite the community around the TI technology. Really all starts with Barry's trading room, which Barry Anderson moderates. There's anywhere between 400 to 600 people in there, depending on the time of the year. And Barry does an excellent job at doing his thing in that room by calling out his trades, showing you how he's using the TI technology, so forth and so on. The nice part about the trading room is that it is free. You don't even have to be a TI subscriber to participate. So if you're kicking the tires, want to see what it's all about in a very structured environment, please go to Barry's trading room. Of course, today's Monday. Myself and Steve host the office hours. Steve takes the helm for tomorrow on the Trade of the Week Tuesdays. And then, of course, in the middle of the week, Hump Day, Wednesday, we like to change it up a little bit and bring in Mr. Dan Merkin, who has been on a nice little vacation in the mountains of Lake Tahoe, but I believe he is back with us as of this weekend. So Dan, welcome back. And of course, Brad Williams, our Chief Technical Officer, usually rides shotgun with him. And of course, Andy rounds it all out on Thursdays with the Trading Studio. I ride shotgun with him. And then, of course, we've got Friday, the open 3-hour webinar, Come One, Come All, anything trade ideas related. We open that room at 11 a.m. Eastern Time and don't close it down until 2 p.m. So we got a good 3 hours in there for anybody that's a TI user to pop in and get their questions answered, whether it's a configuration issue or just, anything else TI related. Been getting a very good response to that, so keep that in mind. 3 hours on Fridays, come one, come all. And once again, a little peek at our subscription growth since we introduced our good buddy, Holly, the AI. Just always like to throw that out there, let you know people are responding simply because the technology is, well, it's kind of one of a kind right now. It's hard to get a statistical model anywhere else of this nature. So if you haven't been using Holly, you might want to think about upgrading to the premium version because that's what you have to do to get Holly. Now, I forgot this slide was in here, but since it's here, we're going to go ahead and just kind of skim over it real quick here. And that's for anybody that has or is currently trading through Interactive Broker. What we've designed is our module called Brokerage Plus, which allows you to connect to IB and, in essence, lay a platform over a platform. There's a lot of different ways we can show you your information once you do connect to IB, but for the most part, and really one of the big kickers here is that it allows you to take strategies that were designed with trade ideas and our backtester. And if you feel comfortable doing so, you can automate those strategies. Now, right now, you cannot automate the Holly strategies. That might be coming in future versions, but we get that question a lot. So just keep in mind, if you do choose to use the Brokerage Plus and explore that platform, you can insert your strategies, but there's no way to currently import Holly strategies. I've been getting a lot of good feedback. You know, the user base is just steadily growing, so people are responding well to it. Of course, this would fall into the category of advanced, all right? Adult Swim only. All right, getting on over to the itinerary today, all right, as keeping with tradition, I'm going to pass it over to Steve because the market action has been, well, for lack of a better term, very hard to peg as of late. And Steve does a really good job at kind of clearing up all the noise and using his technical prowess to kind of give us an idea of, you know, what's happened and what might happen. So Steve, I can see your screen here. So if you're ready.
Sure. Yeah, let's take a look at the four major ETFs. We'll do them one by one, a couple of observations on them. The SPY for the S&P 500. You know, we still have that kind of lagging legacy, as I would call it, trend line, which was broken last week, and now we're kind of just meandering back near around it. But I want to highlight a couple things. Maybe some of you that follow me on Twitter @TodayTrader or heard some of my commentary even last week, I've been kind of raising some defensive bearish flags. Not a full-on bearish position, but I definitely have a bearish bias right now, and I'm waiting for confirmation. Let's just talk about that. The first thing was this, you know, this breakout to new highs and then a complete intraday reversal. I call that the middle finger wick. I've seen that before, and it usually doesn't end well. The Dow gave us, the diamonds gave us a wonderful middle finger wick back there, and as you can see, we've yet to take out and make a new higher high. Essentially, we have lower highs on the short-term time frame. So going back to the spiders again, this is still kind of what I see: the middle finger followed by this high with a little bit of a topping tail wick there, and then the Friday topping tail wick. We were unable to go any higher. I'll just put a line there for now. We were unable to take out Friday's highs, but here's what I've been focusing on. I'm not focusing on what CEOs are saying. I don't care what analysts are saying. They lie. I don't care what CNBC is saying, or Gartman, or Pisani, or any of those guys on TV. I actually turn the TV off and I tune it out. And I just try to focus on the footprints in the sand and the amplitude of those footprints. And here's what I've been seeing. Well, after the middle finger wick went up last week in a lot of our ETFs, look at this giant down candle here. And I know it's hard to see, but the giant red volume bar, basically we sold off and closed on lows with almost 3 times normal volume that day in the spiders. The subsequent day, kind of a day of recovery, and then low volume bounces, as I call it, back up into the pocket. What's the pocket? Well, the pocket is the place where you get a couple days of bounce, and then you start to waffle a little bit. And if you guys hear people say, you know, buy the dip, well, that's a bull market axiom strategy. Buy the dip, buy the pullback. Well, eventually that dynamic is going to change, and buying the pullback is going to get you steamrolled, and it might take you a few times to pick yourself up and realize that's not working anymore. And when that day comes, it's going to be called sell the rips, sell the bounce, fade the bounce. And so that's what I'm kind of starting to see here. Big, high volume push downs, which to me says institutional selling, and then a low volume bounce and creep back up into the range, and a lower high, and then boom. Last Thursday and Friday, over a week ago, a giant down candle followed by another giant volume day. Now, I'm not going to add these up at the moment, but I know these two red candles here basically totaled about 260 or 270 million shares of volume for Thursday and Friday of that particular week. Okay, and then Monday opens up and we don't follow through and we bounce right back up into the pocket on lower volume once again. So 2 weeks in a row, giant distribution selling, and mind you, coming off the heels of this middle finger intraday reversal. So I'm starting to see what we call distribution, which is where the big guys and the institutions will use the pop-up in the price to come back and relentlessly hammer from opening bell to closing bell and just sell as much as they possibly can, then back off the throttle, let it bounce back up on low volume, which it did back here into the pocket, and then start to hammer and sell it again. Well, we didn't really see much volume to the downside today. Jamie's going to talk about that. Matter of fact, our main indexes, spiders did 0.68 of its normal volume. The Qs did 0.48. The Qs couldn't even do half of their normal volume. The Dow did a little over half its normal volume. And the IWM hung in there, and I'm going to let Jamie kind of expand on this, but it seems like there was an attempt at rotation today into the Russell 2000 stocks, not the big guys, the Facebooks, Amazons, and Googles, but the small guys, and that's indicated by the IWM. And again, Jamie's going to have some more corroborating evidence to show you the same thing. So there was a kind of an attempt made today with the most of the volume showing up into the small caps in the Russell 2000. But, you know, getting back to where we were, very, very light volume today on a red candle in the spiders. Very, very light volume today on basically a doji. We pretty much closed right where we opened. You see that perfect cross doji in the on the Qs. So an inside day. We did not take out Friday's high. We're just kind of resting. And again, this is the first of 5 days this week, which is probably going to be the most anemic week of the year in terms of volume. You know, most of Europe goes on vacation in August, late August. You know, the CEOs in tech land are all headed up to the debauchery of the whatchamacallit, Jamie? Having a blank.
Burning Man.
Burning Man, thank you. Burning Man is the last week in August for a reason, coming into the 3-day weekend of Labor Day. It's typically where most people are just going to get in their berated vacations and call this the last week of summer. So not too incredibly surprised we're seeing weak volumes today, but I'm still holding up a big flag of caution. I'm not bearish, I'm not bullish, and I'm kind of leaning towards bearish. To me right now, the path of least resistance seems like we want to go lower. Now, what would make me change my mind? Well, probably taking out this first wick up here with a nice topping tail. Again, 3 descending highs, lower high here, and a lower high down here. Well, if the market has zero follow through and doesn't want to come down and even attempt to fill this gap, which is this line right here in the Qs we're looking at, if price action takes out these 4 or 5 days highs and then moves back above these declining lower highs, well, then I have no choice but then to take down the bearish bias flag and go back to neutral or maybe even positively bullish again. But until that happens, that's not the case. What I'm seeing is big red down days followed by low volume bounces up into the pocket. And typically that's where the sellers might start to show up again. In the case of the spiders, I mean, I probably am going to want to see something, you know, back above this high back here. If we can take out this high, then it's probably a foregone conclusion that the market is back to buy the dip. Central bankers are goosing it and pushing the major trend. Here's our major trend back in play. I've been focusing more on the minor trend, the topping tail here, the topping tail here, and topping tail here. So before I hand it back to Jamie, again, the takeaway is no harm, no foul, but the path of least resistance to me still feels like we're ready for some sort of a correction. That's a bold statement to make. I'm not afraid to make it. I don't make it very often, and I can tell you what, I haven't made it all the way up to this level until I basically saw this topping wick in the spiders and also in the diamonds. Those usually kind of lead to some near-term weakness. So before I go, if I go back to my sector watch list here, I've got this thing parked on 20-day strength. Now again, for those of you who follow me on Twitter, I have been pounding the table on GDX. Pounding the table. GDX was a trade of the week from 3 weeks ago. So you can see it moved up and then it pulled back into the range. People told me I'm crazy. It bounced back up. I pounded the table again. People have said, you're crazy, Steve. It's gold and there's no volume. Well, look at what happened today. Giant volume bar. GDX did 3.14, did its normal 3.14 times its normal volume. So as I tweeted recently, GDX gold miners are breaking out and they're doing it with confirmation of volume. I would also like to add that the sector here in the 20-day sort once again, and I mentioned this, last week when we picked QID as the kind of a defensive hedge in the trade of the week. What we have up here on the 20-day strength is nothing but defensive stuff: gold, silver, silver miners, gold miners, and treasuries, and steel. So that's where the defensive stuff, that's where the strength is right now in the defensive names, and that hasn't changed. Let's look down here. Oil service, home builders, energy, financials, banks, they're all sucking, okay? So just looking at some more footprints in the sand, some more clues, sector-wise, gold is breaking the hell out. And my last point is, a lot of you guys hear me talk about this washout bounce strategy that I have. Well, it doesn't pick up ETFs, but looky, what happened on Friday? What happened on Friday to gold and silver? Well, it looks like somebody with the name of Algorithms tried to rush everybody out of gold. This is the gold ETF all the way down here, and then bounce it all the way back up in the first 20, 30 minutes of the market. And that's usually what I'm saying is the tip off to a stop hunt or a stop run. And when we see that, many times the days preceding that nice looking hammer candle here on the daily chart tend to gravitate up for a few days in a row. So once again, gold and silver just bolstering my theory of a head fake move, get your neck looking one way and then snap it the other direction. I see this a lot. Run the stops first and then the move comes. So at the end of the day, when we see these type of hammer candles, I know from 10,000 hours of watching this stuff that we may have a nice couple of days going forward to the upside. So that's what happened in silver and gold on Friday. Not surprised to see that stuff breaking out today. GDX followed suit, the gold miners, but the rest of the markets just kind of staring at each other, looking at each other. Oh, what do we do next? Oh, let's maybe see if we can get the Russell 2000 to pass the baton to the small cap guys. So that's kind of where we are. That's my thinking. You can follow me at Today Trader and get some of my thoughts in real time. But without a doubt, the gold miners have broken out, and they've done so on volume. And I can say the same for gold. Real quickly, that's a long-term trend line there in the GDX, breaking that downtrend and doing so today with emphatic volume. Gold, the actual ETF, very long trend line going back, and it comes down kind of through here, and basically today this little breakaway gap after the hammer candle on Friday is now on the good side of the downward trend line. So I'm seeing defensive sectors, guys. I'm seeing strength in defensive sectors, and I'm seeing apathy in the spiders and the Qs this week, but I'm still on the side of guilty until proven innocent. This market is. Path of least resistance to me still seems like another leg down. So that's my story, and I'm sticking to it.
That's good stuff, Steve. And that the shakeout, the tree shaking on the gold. I mean,
Yeah.
Once again, these things continue to happen, and they typically mean something, right? And of course, that's going to kind of parlay into what I'm going to talk about next. Let's see here. Let me go ahead and just flip it back over here, Steve. Give me a second.
And real quick, Christopher, I see your comment on BRS. It's kind of very frustrating to watch what BRS did as a trade of the week and now turn around and break out on volume and short covering. But here's the deal. I think it was not something that was easy to handicap. Of course, we don't like the way it stopped us out and then bounced right back up and broke out. But here's the deal. That particular stock, if you look up the fundamentals on it, they provide helicopter transport services to oil rigs and the energy company. So they've got a bit of work, looks like, ahead of them down in Houston going forward. And of course, nobody could have predicted that. So I think that's helping BRS a lot in the last few days, Christopher. The fact that they are a transportation helicopter service to get people out and back and forth to rigs and energy. So tough to have seen that one coming, but nonetheless, I did see BRS moving back higher, and it's frustrating, but it's probably not going to be the last time, Christopher. All right, Jamie, back to you.
Indeed. So I take it you can see my screen again, right? I got the itinerary up here. Okay.
Yep.
So, along the lines of what Steve was saying, and that was a great presentation, Steve, on the technicals there and the gold. Now, of course, you know, when you said water in Houston, oh my goodness, it's a disaster down there. Um, you know, and it's kind of like the elements. What do we need as humans to live? Water, oxygen, the sun. There's this little thing called gravity that is a big part of living here on Earth. Without any of those things, we're done, right? But guess what? We need little bits of those things, but guess what? If we get too much, that's bad. Too much water, bad. Too much oxygen, bad. Too much sun, too much gravity, bad. So there's a fine line, right? And the same thing holds true with information, specifically information that's market related, right? So, you know, once again, trading does not have to be near as complicated as most people make it out to be. So, having said that, let's just take a look. Before we talk about Holly, let's talk about the compare counts and what they were whispering into our ear today. And for those of you who might be attending for the first time, I'll briefly describe what these guys are after I give the readings here. But in essence, well, I guess it'd be kind of doing that in reverse. But compare count windows, for those of you who might not be aware of what they are, they're simply another window that's available to everybody in Trade Ideas, even on the basic package, new compare count window.
And if you
So,
follow Jamie on Twitter, you get a pretty good glance at this when he's tweeting it every day.
correct, because just like Steve says, you know, yeah, we're talking about everything in hindsight right now, but we do like to point things out in real time as they unfold. I mean, for obvious reasons, right? So this little screenshot here, this was what these compare count windows look like 20 minutes after the open today. I'm QuantBot, QUANTBOT on Twitter. If you want to follow my stream, you know, just follow me on there, and you can see this time, or you can see this information as I release it in real time. So 20 minutes into the market, and I like to watch 4 different ones. The one over here to the far right is for companies capitalized at 5.4 billion and higher. This little guy's looking at 4 billion and higher. Right here we have stocks or companies capitalized between 2 and 4 billion, and then the one on the left, sub 2 billion. Now, once again, 20 minutes into the market, what are we seeing over here on the big caps? 61% on the 5.4s and 60% on the 4 billion. That is pretty significant because typically, I won't say the magic threshold, but if it's under 55% one way or the other, yeah, that's a little bit of a bias. But once we get above 55 and really start encroaching on 60 and higher, that's when things are really significant, in my opinion. Now, at the same time, we were seeing pretty significant selling bias in the big cap stocks in the first 20 minutes. And by the way, these windows, as I have them configured on my screen, we're using simply the daily high as the trigger on the upside and the daily low as the trigger on the downside. So stocks hitting highs and lows, but with a very specific filter combination. We've got the market cap taken care of. This filter set is exactly the same in all 4 windows, with the exception of market cap. So we're seeing stocks hitting highs and lows that are doing bare minimum 3 times normal 1 minute volume. So what exactly does that mean, Jamie? Well, it gives us the ability to see the institutional footprints, because institutional volume is typically much higher than normal. If the institutions are buying or selling in a certain issue for the day, well, they've got who knows how many shares to get rid of in relative to how much the stock normally trades. They can't just pound it all out at once, buy it all, because that would impact market too much, make the stock go up too much. They don't get their shares. It's no good for anybody. So there is a large amount that gets done in the first 20 minutes, and then they have to start slicing and dicing that order to try to have minimal market impact and get the shares out for their client, whether it's a buy or a sell side. So what we can do is use these windows to get a little peek to, in essence, generate what could possibly be a very good leading indicator, but more importantly, help us set our expectations for the day, which is huge. All right. It's kind of like, well, there's a 100% chance of rain. Should I take my umbrella? Versus a 40% chance. And of course, I'm stealing a little bit from Brian Shannon's webinar last week, but that was a very good, it's simple and it's a very good analogy, right?
Mm-hmm.
So seeing these readings after the first 20 minutes, and by the way, let's take a peek at where the SPY was. Okay, why did my post market, see that big post market wick?
Bad tick. Yeah.
Ruining everything. So let me do this.
Mm-hmm.
And there we go. Okay. So slow grind up in the pre-market only to get this in the regular session. So let's zero in on the 20-minute mark here. These are 5-minute candles, 5, 10, 15, 20. So right here, ladies and gentlemen, is where we're getting these readings right here. So we've had a little bit of downturn here, but nothing major. So we know big caps, 60% selling, 61 on the 5.4, 60 on the 4 billion and above. And of course, we can see what happens to the SPY. Nice little downturn, quick bounce, and of course, this is very indicative of whether you're just watching this or trying to play a short bounce on it. I mean, a short trade on it, because if you made a good entry, they're sure going to make you nervous while you're holding that thing. Of course, a lot of distance between here and here, but some pretty gnarly bounces, right? But the bottom line is this: if we know, based on these windows here, there's going to be heavy selling in the big caps. So what should I do? Well, I know that there's always going to be a few stocks going up. Maybe they're not going to meet my specific pattern requirements today. Typically, there's always going to be a few. But how should I handle those trades if I do choose to go long? Because I don't short sell, right? A lot of people out there don't short sell yet. They're stuck with going long. So we can really keep ourselves out of trouble, so to speak. Now, that doesn't mean you can't make any money long, but it basically means this. You might find a perfect chart pattern today, all right? And let me just find one here today to use as an example here. All right, LMAT. So for those of you who follow me on Twitter, you know that I like to find these real nice little consolidation areas, right? Of course, LMAT had a significant buyer in it, but of course it flattens out here. And we can take a signal here if this thing's punching through on high relative volume, or more importantly, high 1-minute volume. But of course, whether it's LMAT or any other one I show you today, this was typically the case. You're going to get in the money a little bit, but I've been using this cheesy little saying as of late: if you try to hold, they're going to take your gold, because everything had about a quarter of a tank of gas in it today. It would go a little bit, but if you didn't take your money when they were passing the plate around, boom, back through the line. Sometimes they hug, sometimes they go even further. So whether it was LMAT today, or let me see some of the other ones that I took the time to put out on Twitter today. HRS was another one. Going through this level here after the pullback that it took, creeps back up here. What does it do? It's punching through on high volume. Same thing. All right. You get a little bit of a push, but there just wasn't enough volume to the upside today. Now, of course, if we are watching our compare count windows, we know, okay, well, let's milk it for as much as we can. And then on days like today, once it comes back down to that entry signal, a lot of the times they head lower. All right. But the bottom line is, on a day like today where there's significant selling in the big caps, you really want to mind your P's and Q's on these long trades. Doesn't mean you can't make some money on them, but for the most part, we're looking for stocks that have a full tank of gas, so that that potential energy can be realized, in a trend. But when the market's against us, we have to adapt. Now, going back to what Steve said earlier, look what we saw on the lower cap stocks. Slight buying biases in the ones between 2 and 4 billion and the sub 2 billion. Of course, look at the IWM today. It was the little guy that finished up only 0.4%, but still a lot better than these larger averages fared. And of course, had a little bit almost normal volume on the relative scale. So could this be a sign of rotation from big caps to small caps? Possibly. But just by using these guys, we have realistic expectations. Of course, the SPY in and of itself, once we get that information, if we can make a good entry, 5, 10, 15, 20, hey, it wouldn't have even been a bad trade to short yield SPY up here, since it's nice and liquid, and use those upper wicks as a stop loss. Because once again, once you get up to 60 and higher, that's when the dam typically starts showing some cracks in it. All right, so we had those expectations after the first 20 minutes. If we're going to be going long, mind your P's and Q's, take the money while it's there. Don't wait for the for the bigger move. Now, of course, we talk about Holly. And of course, Holly today, she came to the party with 6 strategies that yielded 13 trades, predominantly long in a downtrending session, because until things change, and I use the term significantly very loosely here, all right, Holly will continue to have a long bias because we're still in that bull market, even though we're starting to get some vacillations up here in the upper extremes. Now, what did Holly come to the party with? Every strategy was a long strategy except knocking on resistance. So the same thing holds true. It's by no coincidence that Holly's P&L graph, whether it's risk off or risk on, jives with what I was saying about, look, these things went, they just didn't sustain themselves. They rolled back over eventually, right? Because the overall drift was down today. And unless they were just hammering massive, massive volume, which, by the way, every time I had something come across my little favorite window here of Turbo Up family, the relative volumes were hardly even normal, maybe encroaching on normal or just a little bit above normal. We did have the short spikes in the 1 and the 5 minute. They just weren't being sustained today. So when I saw that, it wasn't a big surprise. So, going back to the elements, water, oxygen, sun, gravity, we need little bits of them, but too much will kill us, right? And it's the same thing with information. So what are we doing here? We're just parsing all the information into very simple metrics that are easy to recognize and then, assert some expectations there. So we have Holly, the statistical model, who is very powerful with her statistical probability, but even the statistical model was not immune today to the stocks running out of gas. Now, at one point in time today, and of course, maybe for Christmas, Steve, I don't know, maybe I'll get this panel where we can expand it and, do a little bit more technical analysis of the P&L itself. But for those of you who might have a magnifying glass or can squint your eyes real small, you can see here that on the risk on side, we got a little over a point, almost up to $1.06 today. But then, look what happened. It just, these positions just couldn't hang on today. Now, for those of you who might not know what risk on is, it's simply Holly opening her positions, and we can see all of them here, and just staying in them until the close, not closing them out, just keeping them open all day.
I'm over here chomping at the bit to do something, but I hate to interrupt your flow, but
hey, you know what?
I really want to come in and announce this.
If you're chomping at the bit, by all means, please indulge.
All right, put up Qs, please,
Mm-hmm.
and put up post-market.
Yeah, we got the post-market here. Oh,
yep.
Whoa,
yep.
looky
North
there.
Korea,
I can see why you were chomping at the bit.
Yeah, North Korea just launched a shit ton of missiles that flew over Japan, and I think that's what's going on.
Over Japan or close
to
Japan?
They flew over the island of Japan this time. So.
Oh no, that is
a little dicey
not good.
Just wanted to point that out. If anybody's wondering what's happening here, the futures are going to open back up at 6 p.m. Eastern, but the Qs and spiders after hours got wind of this. So This is the flavor we're going to have going into tomorrow.
Now, you're sure that it's over Japan and not by Japan, right?
I'm reading Twitter. Confirms multiple missiles fired by North Korea over Japan. Yes, this
well,
is
that,
what's
ladies and
going on
gentlemen,
here.
ladies and gentlemen,
VIX
wow.
just spiked. Yeah, so we got a little after hours stuff going on that's going to bleed into tomorrow possibly. So that's why I was sitting there chomping at the bit, making noises. I'm sorry.
Well, if it would have been their typical little, dog and pony show of blasting them out into the sea, that's one thing. But if they're flying over Japan and then where do they go? They land in the other side of the ocean,
Land on the other side, but still, multiple missiles.
No. That's
not a pretty feeling.
Well, ladies and gentlemen, nobody ever accused us of living in a sane world. So, there you have it. I mean, how that's going to play out tomorrow. Maybe we go further. Maybe it's all back up before the
kind of on the heels of what I was saying earlier. This market is guilty until proven innocent, and it felt like it was just waiting for another shoe to drop. So, I wanted to chime in there and show you what's going on after market.
Well, that's certainly. Well, hey, that's important news. Certainly not the stimulus that we were looking for, but stimulus nonetheless. So keep our fingers crossed. I mean, wow. Between hurricanes and North Korea, boy, we got our plate full, don't we? So it's no big surprise to see Holly putting on all the long trades, having the P&L jerk up nicely, and then, as I say, even they took Holly's gold today if she didn't lock it in. Of course, what does it look like if she was locking it in? Once again, kind of just a slightly up day on an assortment of the trades that we had here, which were 13 trades, 2 of which were short. The short guys pretty much flatted each other out. We got a 6-cent winner here, 4-cent winner here, up a couple of cents, or relatively flat. So a statistically noisy day, and you bring these volume levels into the mix. No big surprise. So I'd say the biggest takeaway today is the expectations that we could have gleaned by using a few simple techniques within the TI program, compare count windows, noticing how Holly is doing, finding a long bias in a statistically choppy kind of market. So, whether you traded lightly today or just kind of sat on your hands all day, that's probably not a bad move. And of course, not to say that there weren't some good short trades today. Now, those of you who attend on the regular basis might remember the pack leaders list just used to be 2 to 3 times this long as we were hitting new highs, right? Of course, a little bit of downside action. So recently I created the inverse. This list used to have nothing on it ever because we're looking for stocks that are basically at all-time lows, which we know we don't have a lot of those in a bull market, right? There's always going to be a few, but we are starting to get some things show up on the list. Now, this is a little $3 stock, but I just found it pretty entertaining today because obviously it's a new. Is this one of the Reg A deals? I think, Steve, maybe from not too long ago. So
not familiar.
Yeah,
Sorry.
yeah. So Yoga Works. All right. So
sounds like a last 9th inning IPO to me.
When you see yoga studios going public,
ninth inning IPO. Yeah, a Blue Apron. I'm going to add Blue Apron in there as well.
Right. So when you see Yoga, let's see, Yoga Works, which has a float of just over 2 million shares going public with a $65 million market cap, and of course it used to be a little bit higher. Maybe that is a sign that the top's getting there. I don't know. I just found it kind of interesting that this little guy was even alive and kicking. But hey, $4 stocks are shortable too, so might be kind of one to keep an eye on. If the volume picks up, it looks a little spotty right now. But the bottom line is this: if the market continues to digest and head lower, we're going to start to see this list populate a lot more. But for those of you who are out there that like to short sell, then there are plenty, as long as we're playing the range break game or something of that nature, as far as stocks capitalized over $4 billion today, that were hitting lows with high volume, there were a lot to take your pick from. Now, when we talk about stocks to the upside, everybody knows that I like to target the ones that are at lifetime highs. So when we look over here, we don't see any resistance, right? We're having a nice little range break on the daily when we can identify the same pattern, whether it be here on the first range break or here on the second range break, just a great example of FNV just didn't give a damn today. If the market was going up, there was obviously some buying going on in that stock today. And this is one of the ones that actually did continue out of here, took a little breather, and then finished higher. Relative volume of 1.6, and the 1 and 5 minute volumes were pretty healthy all day. So, as we get used to changing our perspective, what I've noticed is, 5, 10, 15, 20, 30, 45 minutes into the open as of late, I've been noticing some relatively decent patterns, and of course we've got some wicks here, but if we clean them up and use the bodies, we can start to notice some of these patterns that are continuing to the downside, using a simple range break to identify a good entry, and then looking to the left here for the thresholds or what could be support. Gets a little bit trickier when you have to navigate the daily chart and try to pick where it might take a breather, but that's the name of the game. So if you're not that proficient at identifying what could be future support levels, now's definitely the time to start dusting off, the skills as far as finding and just being able to quickly eyeball what could be future support, because in this uptrending market, we've been mainly concerned with resistance. So this little guy right here, things doing high volume, can show you some nice quality setups without a lot of risk. So for those of you who are not adverse to shorting, keep that in mind. I'll be able to drop this in the window or the chat window here if anybody wants to grab it, or any other window that you see on my screen.
Yeah.
By all means, just hit the questions panel. I'll be happy to drop that in there.
Just clarifying, Cody's saying, can we get a link to the pack losers and gainers? So I assume you know
Sure.
what he's talking about on that. Great. All right,
Yeah,
so while
absolutely.
he's doing that, I'll orient you guys. The GoToWebinar toolbar is that floating toolbar, and there should be a spot in there called chat where you can click the little triangle and open up and drop down the chat window. And once you've opened up the chat window, you'll be able to receive the code links and anything else that Jamie's dropping into that window. So he's saving and sharing the code cloud link, and he'll drop that in there. And once that link's available, anybody can copy that link and just go right to File, Load from Cloud. And if it's not already pasted in there, just go ahead and paste it in there and click Load. So that's how easy it is to share and collaborate different strategies that you guys see on here.
Yeah, and one thing I'll point out about these, whether it's the pack losers or the pack leaders, is I always like to point out the fact that, hold on one second here, not a great multitasker. Okay, so when we're using an alert window, so to speak, which this is a multi-strategy window containing multiple alert windows, so what I'm doing when I see these guys, since they're kind of already in play and they're hitting highs, it's more of a reactionary window. In other words, I'm sitting here, I'm looking at Twitter, it's the middle of the day, but all of a sudden, ding, 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 FNV hits a new high. If I find it right here, as it's breaking this plane, of course it can't do that without hitting a new high, and it wouldn't be coming through here if the volume levels weren't good. So I react, I go, oh, it's a great trade. I'll buy it anywhere in these two candles, use a stop right about down here, about 15-minute look back or whatever you're comfortable with. Nice tight risk. And of course, we get a nice push to the close. So it's a reactionary window. But what I like to call these windows, the pack leaders and the pack losers, right here, this position and range cylinder. If it's buried all the way to the right, then it's hitting highs and would show a value of 100. But a lot of the times during the day, say we are in a slow upgrind market, I can look at these guys before they get to their highs and go, oh, okay, well, is the chart conducive to what I like to see? Maybe it is, maybe it isn't. But let's just pretend for a moment that I found ICLR back here as it was chopping around after it had put in this initial high right here. So I might see ICLR on this list because it is above 100% on its lifetime range, which is the main qualifier here. And then I see it's just kind of hanging out right below this high here. I draw my line, creating an easy visible barrier there. So I'm like, you know what? It's right here right now. I'd like to get an alert once it cracks back up here, or maybe even set a custom alert by right-clicking here, just so I don't miss out on it, and setting my price alert. That's predictive, right? Okay, maybe it doesn't do the high volume, but as we all know, sometimes they go without extremely high volume if other stocks in their sector are going along. It's what we call, a sympathy play. Like, for example, CBOE today, it tried to bust out for a little bit, but of course it's got this big expanded, really big horseshoe type pattern here. So it went all the way down, came all the way back up, started hitting these highs later in the day. And of course, once again, just like everything else, don't like to see near this much energy expenditure, but once we start consolidating up here, a lot of the times that assesses low risk. But as we can see, with everything else today, barely gets out above there and then falls back over, right? But the bottom line is, using these cylinders here for the pack leaders list, something that might not be there, you can go ahead and set that alert. Maybe it's only doing 2.5 times normal volume as opposed to my 3x volume, which is what these guys are looking at for the pack leaders. So just another way to spot trades without them busting through, but looking like they're about to. Okay, so I dropped those windows into the chat panel here. Steve, we got any other questions popping up that need to get addressed here?
No, what you might want to do is maybe just click on it. So for anybody who doesn't know, if you just click on that link, what happens, and then Jamie can show you the steps of loading. Okay. If you click the link, it takes you to a web page, and he can show you from there.
So once we click on the link, it takes us to the web page. The URL up here is the cloud link. So it's real easy just to right click and copy up here. Or if you don't like messing with the toolbar, you can just copy the big red line down here. Either way is fine. Once you right click and we copy it, then we just find our TI toolbar. We go File, Load from Cloud. Now let's see. It should have already posted it in here. And Steve, you mentioned that little bug.
Yeah, I think it's a pullback, but I think today's low is probably, see it break, BRS, so it looks like around 838 or so. I would keep an eye on that level. Considering what's going on in the news and the need for that type of service, that's one item, but technically, if I didn't know any of that, I would just say use the low of today's candle as you're out, and hopefully it'll continue to move higher. Again, 64% short the float. If they're feeling like they're on the wrong side of the lifeboat there, you could have a couple more days of good movement simply because of the short float being so high. But beyond that, that thing has definitely confounded me last month or last 2 weeks for sure. So that's the best I can give you, David. I'm sorry, Christopher. And then Jamie, question for you there from David.
Yeah, checking it out here. Do you continue to pay much attention to your CC windows throughout the day or at the 20-minute mark? That's a good question, David. And a lot of the times in the past, what I would do is take that 20-minute reading, right? Let me just pull a compare count over here. And, here lately, I haven't been doing this just because sometimes it means something and sometimes it doesn't. But what I would typically do, the 20-minute count, I believe, is the most important based on my experience from watching these windows for many years. Now, a lot of the times, what you might want to try to see if you can notice any correlation is after the 20-minute mark and you take your initial reading, just right-click and duplicate. all right? And what you'll see here is the blank one, or the duplicate, will start a fresh count from that time. So a lot of the times you can see, okay, if I saw 55% in the first 20 minutes, and then I made the duplicate, and now in the, after the first 20 minutes, then we start monitoring whatever next block of time you're comfortable with. Maybe it's the next 10 minutes, maybe it's the next 5 minutes. But a lot of the times, if you want to get real detailed like that, you can use the duplicate window to see if the momentum is increasing at a rapid rate or pulling back. My honest opinion, I think that's getting a little too specific, a little too hair splitty. I like to watch the overall count and just see if it accelerates or starts to stall out, or even starts to reverse, right? Because you would have noticed a little bit of reversal once this bottom got put in on the SPY today down here, and we started to bounce back up. Even though it wasn't a very hardy bounce, those metrics are going to change. But in my honest opinion, from my experience with the windows, the first 15 to 20 minutes is really what we're using, because all we're doing is we're putting on the X-ray vision glasses or the infrared glasses, and we're able to see where the institutions are doing business in that first 20 minutes. And based on the heightened activity in those first 20 minutes, that's information that most people don't even know is there, much less are they trying to put it together into some usable form of metric, which has proven itself to be a very good type of leading indicator as to the overall heartbeat and bias of the session. So I hope that makes sense.
Hey, before we go, I see the spiders on your screen after hours. You're not pretty. What does GLD look like?
Let's take a peek here. Oh, joy.
Yep, the market's getting a bit more defensive as we speak. So.
And by the way, usually we take the time to go over some individual trades on Holly, as we saw from her risk-on, risk-off performance. We could do that, but there's not really big, very large spreads between risk-off and risk-on today, and that's typically the game we like to play, is try to get a little bit in between 18 and 33 cents on ADAP today, which, by the way, was still a good entry today and a trending stock, just didn't move that much. But I will point this out. Once again, max profit, which is looking at risk off only. Once again, on the two that did not move in our direction initially, very small losers of 4 and 2 cents. And then, once again, on this last batch of trades here, on 11 out of 13, was in the money on all of those trades. Now, of course, these are the smaller, only in the money 2, 3, and 5 cents. But once again, from a overall task, put on 11 trades today, were you in the money on all of them at some point? Not an easy feat to accomplish, especially in a market where the downdraft was occurring. So, Holly's still doing her thing. Performance-wise today, can't really complain too much, because it mimics all the other things that we were talking about along with market conditions. So,
it's funny. I mean, sorry to cut you off, Jamie, but I'm reading a couple of the last comments like, oh, okay, did Steve shoot that missile off? Did somebody know that missile was going to be shot off? Sometimes it's a valid question, but the answer is no, but things start to line up. You start to see things line up, and it's almost like the price action waits for the event. So, we were already kind of on defensive legs. Again, to answer Gregory's question, defensiveness means going into gold, going into treasuries, going into gold miners, selling equities straight up. But it's not unusual. I've seen it before where the market kind of paints itself into a really defensive corner, and then something bad happens, and everybody blames that's the bad reason that we went down. Well, the market was getting close to trying to find a reason to sell off, and sometimes when we get to those points, shoes start to drop and things start to happen. But
right, and Steve, you got the big banks coming out and throwing out these warnings. Right.
I try not to. I try not to get too caught up in banks and analysts. I try to just look at the footprints on the sand and the sectors and see what's happening. And I've been kind of banging the table for a couple weeks about being bearish. Well, after this news event in the after hours market, I just tweeted that I am bearish until further notice. So I'm just going to go out there and say that.
Right, and you couple all of those technical indicators, combine that with probably, since I've been alive for 48 years, probably one of the most craziest worlds I've ever seen in many different capacities. And of course, crazy Kim Jong-un shooting missiles over Japan. Well, I think that's just kind of the cherry on the crazy cake at this point. So we'll all see what happens. I'm sure it's going to be all over the news today. And so we'll just have to see what unfolds in tomorrow's session, but we've all got a front row seat.
Yep. All right, I think it's time to bring Scott back in. Thank you all for the kind comments, and we'll continue to try and provide real-time value on Twitter for those that are following us there, and we'll rehash it, at the end of the day. But yeah, it could be an interesting session tomorrow. Futures are going to open back up here in 1 minute, and there'll probably be a pretty big gap down in the future. So we'll see what happens overnight.
Yes, sir. Thank you very much,
All right.
Steve. Scott,
Yep.
if you're waiting in the wings, we're ready for you.
Yeah, thank you all. We do have a podcast every week, and last week we had a special guest, and Steve Gomez took charge as the host along with Jamie. We had Sean McLaughlin, who just joined the Trade Ideas group on, so you could download that podcast and check it out. We had a nice conversation there, and there's also some other back issues of the podcast available. You can just get those after you download it. There'll be a fresh one up this weekend too on late Friday. So just search for Trade Ideas Podcast in the app that you use to listen to podcasts on. Pretty easy. Add that subscription, download any of the archived versions that you want to enjoy, and check it out. We also have a code. It's a discount, and it'll save you 15% off your first month or year. AI Trades, all caps. You can also get this card and some of the other ones if you expand the handouts section of your GoToWebinar control panel. It has a download right there for a link to a PDF, and you can just download these. So again, AI Trades is a way to save immediately. You can also use that to upgrade from standard to premium in your account management center. And do remember that both standard and premium types of trade ideas come with a full hour of one-on-one training, so do take advantage of that. Email us with any questions, info@trade-ideas.com, or you can shoot Jamie or Steve an email directly to the emails on your screen or that download if you get that PDF. Follow Steve at at Today Trader on Twitter. At QuantBot is Jamie Hodge. Dan Merkins at Trade Ideas 1. We also have some other handles like at Trade Ideas. Thanks, everyone. We'll try to have the recording up later on tonight. You get it by tomorrow morning. Thanks, Steve, and
All right.
have a good one.
Hey, thanks, everybody. We'll see what happens tonight. Good luck tomorrow.
Yep.
Futures just opened. They looked ugly.
All right. It's on.
All right, guys. We'll see what happens tomorrow. Thanks for tuning in. Thanks for the great comments. We see them all. Thank you. Bye-bye.